Good morning, everyone, and welcome to the Quantum Leap morning market analysis and trade plan setup for Wednesday, February the 12th, 2014. For those that are visiting from Twitter or watching on video, Quantum Leap is a self-organized learning environment. We run a private Skype room. We've been around for about 4 years now, and my name's Doug McKay. I'm the founder and head moderator. If you're interested in coming out and checking the room out, you will need a Skype account, and you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Or you can send me an email at dm@m4connects.com. By the way, I will be switching and shutting down that email and moving over to my new email, which is d.mckay@stealthtrader.com. Anyway, what we do each morning is we come together and we take a look at the market, set up our trade levels and our targets for probable rotations. And I start with a macro to a micro view. So if you want more in-depth analysis, you might want to wait and just move the video ahead until we get into more in-depth charting. But we go through this process in order to prepare for the trading day, and I don't cut corners. Of course, I got to get the disclaimer out of the way, so let's get that done. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. I am at Stealth head office, so if you hear people talking in the background, don't worry about it. All right, so let's take a look at the numbers and see where we're at. Of course, we're coming up again, and we're back above 1800. We're in a range, I think, today between around 1805 through to about 1823, and we'll talk about that when we get into the composite. But we are still below the year open at 1837.75, but we are coming up, probably going to test that number in the next few days. Our month high continues to range up, 1819.50 for the high. Currently, our month low is down at that 1732, so way below us right now. Nothing really else jumps out. Of course, we've got the year high at 1845.75 and the all-time high at 1846.50, but I still think we're a little ways away for that. Yesterday, going into the Globex for Tuesday, we opened at 1795.25. Had a high in Globex at 1804.50, a low of 1794.25, and we opened the RTH in range at 1796.50. You can see that we are trending up for the last 4 or 5 days. We had an open test drive. They opened the market and then tested both sides, and then the buyers took control and trended us up. And it's interesting to note that we didn't leave value behind yesterday. They actually stole the VPOC right at the near the close, and we'll talk about that and what I think that means. The opening swing high 98.75, opening swing low 95.25. We basically went down and tested the range from the prior day, and the responsive buyers stepped in and took us outside of range. We opened up outside of value and just took us up and broke into the 1800s. I was thinking 1813 area. We actually pushed a little bit higher and tested that CLVN at 1818 and just pushed through it again, and then they rejected, and sellers stepped in at that level and brought us back down, and we closed right around that 1813. If you remember, that 1813 was where we went down and picked up buyers a couple times when we were up in this upper distribution, but we'll take a look at that on the composite chart when we get there. Initial balance high 03.75, initial balance low 17.95.25 for 8.5 points. So again, we've come back into normal ranges for the initial balance. All the intraday numbers very much trending up for the last 4 or 5 days. VPOC shifted. They stole the VPOC into the close at 1814.25, and our range right now, 20-day ATRs are full session just over 17.25. I'm sorry, RTH just over 17.25, full session just under 23.25, and Globex just over 14. You can see that the range has been expanding as we battle this upper distribution. Value area high 1950, value area low 1803.50 for a 16-point value area. So pretty wide. And then we're back to the last couple days breaking the IB inside of the pocket between that 9:30 and 9:45, whereas lately we've been breaking much later in the morning. Going over to the daily report, you can see that with the full session high and full session low so far in Globex, our ATR targets are 1834.25 to the upside, to the low side 1795.75. There's no real news today. We've got crude at 9:30. We've got the 10-year bond auction at noon, and then we've got federal budget balance at 1. So I believe they passed the vote last night that they're going to give the extension for the debt ceiling. I didn't think anybody anticipated they would really not extend that out. So I don't think that really shocked the market at all. Let's take a look at the trend now coming in. I always like to start with the monthly. You can see we came down and tested the 9 EMA to the tick on the monthly, closed that technical gap that we had. We've got good slope and separation on the 9 EMA and the 20 SMA. Trend is very much intact, and we're now into the middle distribution from the prior 2 months and breaking outside, trying to break above the high in November. Going over to the weekly. The weekly, we had that weakness. It looked like they were going to break below the 20 SMA. They pop right back, and then we have now this week broken back above the 9 EMA and continuing the trend, and we're starting to get slope, and we'll see if we get a continuation of the trend up and get some separation as well, and go up and make new highs. I still consider that this 1846.50 is a weak high, and I think it will be tested and broken. But you never know. What you really want to do is keep an eye on if we come up and we fail again to come up to this 1844, 1845, and we have a lower high and then break back below 1800, then I think we might have had a bit of a bear trap there. On the daily, we had that technical gap right here, closed the gap, broke above, tested the 9 EMA, and in the last 2 days we've continued up and trading above the 9 and the 20, but there's no real slope or separation on the daily. I've really been struggling with the geometric chart. We've broken back above the center line of the downward sloping fork and come up and tested the bottom of the long-term upward sloping fork, and now we've broken above it. To test the upper line of the downward sloping fork, we're looking at 1823.50, 1823.75 area. So that's a definitive target. There's a I think it's a naked VPOC or a naked close or both up at that level. So I think that's a very high possibility that we go and test that today. A test of the lower line of holding inside of this longer term fork now that we've broken in it will take us down and test the 1800 level, and you can see it's just above the 20 SMA, and we're coming up with the 9 to see if we get a possible hug and a possible break back above, and if that happens, I think that we'll see a much bigger move up. Just want to go and take a look at the intraday trends. You can clearly see on the 4-hour where we have where. Let me just bring this in a little bit. where we had resistance here in around that 1809.50 area, 1810, 1811. I mean, just in that area, that was resistance. We've broken back above, fell through it, and then we come back up. I think that's going to be key to hold right here and hold above this level if we're going to get to continuation. And of course, we've got this distribution zone up above us, between the 45 and the the 1820 area as our next area of consolidation above us. The trend on the 4-hour is definitely strong. We've got a bit of a tech gap going here on the 4-hour. A close of that tech gap would bring us down into that 1809.50. But we do have good slope and separation on the 4-hour. Going down to the 15-minute, a little bit different story. We had fallen off overnight, and we've just been coming down. We have slope and separation to the downside, but we are now trying to break above the 9 and hold inside of that. And a test of the 20 SMA will bring us up into that 1815.50 area. There is a naked cross right here at 1816, 1817 area to keep an eye on the 15-minute. And then just on the going down to the micro on the 5-minute, you can clearly see that we've broken above the 9 and the 20. We have a naked cross down here at 1813, call it 1813.50, and currently trading above that. But the downward trend that we were in has has been halted, and we're starting to create an upward trend consolidation on the 5-minute. So let's take a look at what this all looks like on the big picture. I'm just going to bring this down so you can see this, and let me just take these lines off here. Oh, that's not what I wanted. Just makes it a little bit easier to see. So when we were in this distribution, going back through to November the 14th through to December the 19th, the last most accepted price just before they broke out a range was this 1802.50. The upper range of that microcomposite was at, basically 1806.75. We've got a CLVN right there at 1807. And currently right now we're trading in this little distribution zone in between the 1818 CLVN we were talking about yesterday and this 1807. And what's interesting about this is, if you remember back when we were trading in this upper distribution around, in this microcomposite around the 3225 microcomposite VPOC, we had that one day where we broke down. It looked like we were breaking out because we broke below the 17.25, and they came right to this 13 area, and the VPOC actually for these 2 days was down here at this 1813.50, and then just at the very end of this day right here, which was January the 14th, they stole the VPOC on the microcomposite, and it shifted up back to that 32-33 area. So this, and then on this day right here, we came down and we tested it again right to the tick. We came right down into that 13 area, and then buyer stepped in and it took us up. So right now, as we're in this range again, we could get stuck in this range today between 1807 and 1818. But if we break above 18, then I'm looking for a move up to close this gap that we had. That's at 1823.75, and that will be my upward target for today up here. And then if we can get above that 18 or that 23 area, then I think we're going to get inside of the value area, and the value area low for this whole distribution zone that ranges from December 23rd through to January the 23rd, so almost a full month there, the value area low is 1824.75, and the value area high is 1840.25. And of course, if we get back inside of that value area, everything shifts to a rotation back up into 1832.50, and I think it's inevitable if we get above that area that we rotate back up in here, because they'll probably have to go up there even if the sellers step in. Now, the interesting thing about yesterday is that you can see that it was a trend day and turned out to be a triple distribution trend day, and you can see that the sellers were stepping in and were relatively active. Usually when you get a trend day, you leave value behind as there's no opposing force, and it just you don't get. You can see that we've got this bit of a stair step, where the VPOC, this gray line right here, I think it's gray, you can see is where the VPOC was during the course of the day. So we never really left value behind. It kept on, stepping up, and right at the end of the day, they came up and stole the VPOC into the close at 1814.50. So this trend that we had moving up was not completely unopposed. So the sellers, are still active, and trying to hold this down. They're finding value to step in here. So I'm thinking that we're going to stall out today, and we're likely to just chop around in this zone. Couple key areas that you want to keep an eye on. This 1815.50. LVN, that is also the key LVN from overnight in the Globex. So let's just take our Globex numbers and just move those over onto our chart. So you can see we had a double distribution last night. Net inventory is long here. We're just breaking back above that 1815 now, and the two HVNs from overnight is 1816.50, which is likely what we're going to hit in the next couple minutes, and down here at that 1813 again. And you can see buyers are finding value, and they're holding us above that 13 level, and that's going to be key today. So overnight high right now is right up at that 19. We went and basically tested the value area high and the range high from the RTH yesterday, and the low is 1811.25. Which is right there at the LVN. So you've got two key LVNs from yesterday's range. Is that LVN 11.25, which is now the overnight low, and then you've got the 1805.50, and with the three HVNs at 14.50, 9.50, and 0250. And remember, 0250 was the last most accepted price before they broke out of that lower distribution, that microcomposite that we keep talking about. So in terms of trading this, we're going to open up in the upper distribution now if we don't continue to to move up and break 1950 before the open. So what I'd be looking for right now is I'd be trading off of this 11 area right here. If they if they come down, we've got the naked VPOC at 1450. We've got the naked close at 1350. It's right in this around this distribution. This has actually shifted the composite high volume node here to 1375. If we open up in this area, I would anticipate them closing the naked VPOC and the naked close, testing the 11 area, taking out the overnight low, and I'd be looking for responsive buyers to step in there if they're going to push this outside of value and outside of range today, and go up and take out the naked VPOC at 22 and the naked close at 23.75. Remember that 23.75 is also a test of the upper line of the downward sloping fork on the geometric chart. So I would be using the 11 area as a trade zone, and then I'd be looking for a break above that 1950 area, taking out the overnight high. The value area high is there as well, getting outside of value and coming up and closing the naked VPOC and naked close. So the naked close would be my initial target. It really is 22, but I think if they get to the 22, they'll actually come up here and take out that naked close as well. And then if we get above this 23.75, remember that the value area, let me just bring this in here. The value area low for this distribution is at 24.75. So I'd be looking for them to, for the sellers to step in around that 24.75 area and try to hold us inside of the value, or try to hold us outside of value of this microcomposite. And then above that, everything shifts to 32, and 32 is going to be my secondary target for the day, with the other side of balance being that LVN right here at 34.25. And then above that, the next distribution zone and where they tried to hold value, up here is in around that 39 area, 38.75, and we've got a naked VPOC and naked close up there at 39.25 and 30. I think it's 38.75. No, 30. It is 39. So naked close at 39 and naked VPOC at 39.25. And then of course we've got the overnight, the year high at 1845.75, and then we've got that all-time high at 46.50, and really, there's a naked close up there at 46.25. So I'm not even looking at 1845.75. If they get up there, they're going to equalize that week high and probably go make a new high and take out that overnight, that all-time high. If we get below 1811, I'd be looking for a rotation back down to this 1809.50 area, and that will be my initial target below. And a push through to test that key, what I consider to be the key line in the sand right now, which is that 1806.75, 1807 area, which also happens to be right there at the midpoint of yesterday. So I'd be looking at this 1807 to 1806 area. I'm actually going to put a trade zone here at 1805.50 because that was a LVN, separating the middle distribution to this lower distribution. So this will be a trade area. And then below that, we've got the value area low, but the key number for me down here is that 1802.50, because that's that VPOC of, where they held value just before they broke up and went and created this distribution. So a target, my extended target below is going to be this 1802.50 microcomposite VPOC and the HVN from the lower distribution from yesterday. And then extended target and trade area is going to be down here at that 1795.50. Remember, that's the range high from Monday, and where they held, and we've got that naked close just below it at 94.75 with the value area high at 94.50 from Monday. So that will be my extended target and a key trade level, because I would expect that buyers would step in and hold us up. And if they don't, then I think we're going to shift back down to this 91.50, take out the naked VPOC, but the real number below will be, again, will be down there at that 18.50, which was the microcomposite VPOC from this distribution zone that we're in for a while down down here and then came back up and held before we broke out, and now getting back into this this upper distribution. So those are my trade areas and my targets. My main hypothesis is that we're going to chop around in this upper distribution, test the 1811 area and take out the overnight low, and then possibly work our way up and try to break outside of value and go up and take out that 1822, 1824. I still think they're going to push it higher, although I think we can get some opposing force here, and we could get stuck in this this wick right here in this distribution zone between that 11, 13 area up through to the 19 area, 1950 of the high. And let's just take a quick look at what that looks like on the Keltner. Center line of the Keltner is 1815.75. That's that CLVN, or sorry, the LVN area from the double distribution from overnight. Test the upper Keltner line will take us up into 21 and a quarter, but by the time we get there, it's like going to be closer to 22.25. So if we stay above the center line of the Keltner, I think we'll get the drift up to take that out. A break below the center line will take us down into that 18.10.25, or right into taking out the overnight low and testing the LVN and CLVN down there at 1811 area. Let's take a quick look at gold. I want to bring this back in because, again, this is an important pattern that I've been talking about for quite some time. This is a descending, broadening wedge. We came up and tested the trend line, for the third time, and broke through it, and I said we need to hold a couple days above it, but if we can get above and hold it, we're likely to get a rotation and put in a bottom in gold and get a bigger move back up into the 1300s. And what that looks like here is we've broken out of this distribution zone with the high at 1279.80. We're finding value here in around this 1290. We've got a CLVN just below us right here at 1288. We need to hold that, and if we could hold that, then I'd be looking for a move to test the 1300s on the other side of balance around this distribution zone in around the 1291.40, 1292 and a quarter area. And again, if we don't find responsive sellers stepping in here to defend the 1300 level, the number and target above is up here at 1350. If we get back, below this 88 level, I think we come down and we test the prior range, high up in that 1279, 1280 level, and then if we get back inside, the target that I'd be looking at is going to be all the way down here at 1261.30 again, and test the value area high of this distribution zone. We didn't bring value up. Value is still all the way down here in that 1241, 1242 area. So if we get back inside, if they don't hold us outside of value and we get back inside of value, I'd be looking for a rotation all the way down towards this 1242, possibly even come down and test the value area low down here at 1238. And then 1237 still remains a key line in the sand, because if we can't hold inside of value, then I think we're going to come all the way down to 1226. And if we get more weakness coming in gold, I think we might see a push down all the way down to test the the 1100s again, and with the main target below there, down here at 1203.30 area, which was a key level for us on several occasions when we came down to test those 1100s. Anyway, that's everything that I have. Howard, do you have anything you want to go over?
I can cover a couple of things.
Okay, over to Howard.
So just thought I'd take a quick peek at the weekly chart. From our all-time high at 46.50, we had a strong push lower that took us down to the 0.382 retracement from back in June, swing low. That's back here. So from here to here, we retraced 0.382, formed a large weekly hammer, and never did close below the 20 SMA on the weekly. We made a strong challenge of it, but came back and closed above it, below the 9. In this current week, we are back above the 9 EMA, so it looks like we formed a pretty strong bottom here. We're back above the 9, and we're still early this week to see if this 9 level holds. That would be an important support level for this week. Looking at the daily.
At Fido, we've got...
So here we can see on the daily we made our low here at that 0.382 retracement level, which I've marked here. And then since then we've had several very strong pushes higher. We pushed above the 9. Yesterday we pushed above the 20 and 50. 9's getting ready to crash back up above the 20. So when I was talking about wave structure here, this was looking like it could be a corrective pattern, even though it was a strong one. A 3-wave down, 3-wave up, and a 5-wave down. That's a corrective type structure. And then since then, we've gone into a strong push higher. And I thought I had a level marked at the 0.782 level here. That's about where we're at. I'm not seeing that shown here, so I'll have to look into that. But if we crossed above the 0.782 retracement level of this whole move down, then it's very likely we're going to push to a new high. So now let's go ahead and take a look at some market breadth. Since we made our bottom here, we also made our bottom on the advanced decline on a 10-day average basis here in the middle chart on pretty much the same day. The bottom on up volume versus down volume in the lower chart is back here on the 29th of January. Since then, market breadth has been getting stronger, and the NYSE in blue, or cyan, has actually pushed back above the break-even 50% level. On the advanced declines, the NASDAQ is still pretty much right at the break-even. Up volume versus down volume, both NASDAQ and NYSE are now above the break-even level. So we're at kind of a key level here. If we do stall out and move lower, that could simply be a retracement of this move higher since it was so strong, but it'll be the nature of that move lower if we get one. That will help determine if this ends up being a retracement versus a continued push to higher levels. So next we'll look at our sectors. So So far, our highest performing sectors this year are utilities and healthcare. So healthcare had been leading since the beginning of the year. It fell below the utilities for a while, and now they're catching back up. Technology is back near the break-even level for the year. And since we made our bottom in price, the sectors pretty much all have participated in this strengthening of the market. So that's all I've got, Doug. I'll turn it back over to you. Got 9 minutes to open.
Thanks, Howard. That's going to conclude our morning homework session for February the 12th, 2014. As always, trade well, trade safe, and we'll catch you on the flip side.